It is interesting in the EV space, you've had success with past shorts in this space specifically. And this time around, you're highlighting ChargePoint. Why is that?
Well, EV is an interesting concept. And when we started in 2020, 2021, you can say everybody wants to be the next Tesla. Everybody wants to be the trillion-dollar company. But companies like Fisker, Faraday Future, Canoo, they had all the great concept. They had the subscription model. They had the concept. They had the prototype. But when it comes to whether you can scale it at a cost, that's not happening. So a lot of financial difficulties with all those three companies, and they all went bankrupt around 2024. And that speaks volume. And ChargePoint, you mentioned it. Tesla recently opened up charging stations to all the EVs, and I don't remember exactly when, but that is a lot beneficial compared to other EV companies like ChargePoint. And it's just they are there like a product, but it's not working. And consumers that we spoke to conveyed frustrations on not charging.
It is great to have you here. And so the consumer's a big part of all these different trades and all these different companies. I think there's been a deterioration in terms of consumer credit. Yes. What are your thoughts in terms of the consumer and how it sort of plays into this entire thesis?
Well, 60% of our population are living paycheck to paycheck. And how they are managing is thanks to, or no thanks to, buy now, pay later. They're using it to bridge the gap. And shockingly, 25% of the consumers who use buy now, pay later use it to pay groceries. And that is not a healthy economy. That's a very, can I make it today kind of economy. The way consumer credit comes into picture is that when COVID pandemic happened, the stimulus checks started flying out to all the consumers. And I think that kind of tainted what is a prime credit score and subprime credit score is. So some consumers pay down the debt that boosted their credit availability, and other consumers choose to buy things they otherwise wouldn't buy, like a Maserati, for instance. So auto loan origination spiked up, and now we are on the other side of post-pandemic hangover, so to speak, and we are seeing consumer delinquencies spiking up. And what's interesting is we are not seeing it on the equity side. We have been focusing on the asset-backed securities for auto loan originations, and we are seeing spike in charge-offs, spike in repossessions, and it's amazing. None of this is impacting the equity side yet. You don't see companies increasing their PCL, provision for credit losses. So it is, consumers are in a very, very tight spot.